Hello, nieces and nephews. It's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, the S&P 500 is chopping. Okay, unfortunately for me to say, volatility has been low these last couple of days, and it has been chopping. It has been range bound, and it has been setting traps on retail traders up and down. People getting played unless you are a sheep style trader. Okay, if we do a little recap here, you guys should at this point know how Uncle trades. Okay, I use the 15 to 30 minute chart. Smallest time frame is 15-minute chart, which is usually what I show you guys for my intraday recap. Okay, and what do I say? How do we trade it? We use the levels, we know the setups, and we trade it unbiasedly. So when we get a breakout of resistance, we want to look to long, and we play it level to level. And on the 10 o'clock candle yesterday, we cleared my 568 level because I wrote it right here. To truly trust yesterday's bounce, 568, 570, 572 must clear. If 566.5 fail, another backtest of 565 in play. Once we got the breakout of 568, I wrote as of now 568 clear, putting 570 in play. Bulls really need to recapture 570 and 572 to truly be bullish and claim victory, okay? But we play it level to level. So once we got the breakout, it went as high as 569.8, just a few cents shy of my 570 level. Level to level, you take profit. And this is so important why you want to take profit when you get close to your target or at the target. Because look what happened. Pullback time, okay? And look what happened on the next candle. Broke back down 568. And once it did, I alerted to the group. Strong selling pressure at the 570th level. Bears are still alive. 568 failed, put in 566.5 in play, and if that fails, another test of 565 below. So we got the a little false breakout here, smashed 566.5, and boom, it bounced. Here's where it got tricky because remember, I always tell you guys, trade with the traps. So even though this was a recapture of 568, there was no follow through. It was like a dollar and almost $1.20 move. Decent for a scalp trade if you took it, but unfortunately, boom, false breakout once again when we broke down 568, hit 566.5 once again. This is why it's so important. It even went lower, going as low as 566.49. Once it broke down that 566.5, went a little lower. This is why trading level to level is so important, because if you don't trade level to level, you know, you're going to get trappy days like this. You're going to get played, okay? You think it's going to go down, then it go up. You think it's going to go up, then it goes down. Level to level, get inside, get your money, and get out, okay? You guys can see it. Not every setup worked, but hey, 3 out of 4, 2 out of 3 is pretty good, if you ask me, okay? I'm not looking for 100% accuracy. I'm looking for at least 51% accuracy with really good risk management skills. You put all that together, you're going to create a great trading plan, a trading approach, an algorithm, if you will, for yourself. Okay? So that's the market recap. We just pretty much traded the traps inside this chop, level to level style. But when is the chop going to end? Because a lot of people don't like chops. For people like me who likes to trade, who like to scalp, level to level, day trade, all the happy stuff, you know, these chops aren't too bad. But for other people, they might not have time to be sitting down all day looking at the charts, waiting for those little $1.20, $1.50, $2 moves. They need bigger moves. They need decisive moves. This is why it's so important what I'm about to tell you guys next. Because this is for you guys, for the swing traders. You guys already know the market cycles between two phases, the chop phase and the trend phase. And right now we are in a chop, okay? And when we are chopping, we have to identify the chop range. The chop range that I have right now is 565 up to 570, okay? It's a $5 chop range. For me, that's a nice chop range because it's a decent range where I can trade intraday with the traps, false breakout, false breakdowns, level to level. But once this chop range break, for the people who really genuinely don't have time to be day trading, because they're working, you got to wait for the break of this range, okay? If we can finally clear 570 today, I would be bullish, multi-day bullish. Why? Because we recaptured a fib level, 570 fib level, and we recapture the 5 DMA. And getting back above the 5 DMA is evidence that we are heading back up higher, that we are bullish, because the market spends time above the 5 DMA when it is overall bullish, looking to head up higher. So right now it's below that. It rejected from the 5 DMA, but it also bounced from the previous all-time high from July at 565. So it's both bullish and bearish. So when it's both bullish and bearish, that means it's chopping. So to be bullish, 570 must recapture. That's good. That should be good for a swing tradable move to the upside with 572, 573.5, 575, 576.5, and 578 in play. What I recommend is, if you long 570, take most profits at 572 or even 573.5 and leave a runner and swing your runner and leave a trailing stop loss. You don't even have to look at it no more. Just let your stop loss babysit your trade and you can go back to work. Okay? Now, if we don't clear 570 and it rejects and we break down 568, 566.5, look to short. Take most profit if we go close to 565. But I tell you this, below 565, it will be a good swing tradable move to the downside. Okay, we could possibly also break down the 20 DMA. All right, and if we break those levels down, the 565 level, the 20 DMA, which is around 563-ish, we are bearish. Good for a swing tradable move to the downside. Bottom line is we are chopping. 565 to 570 is the chop range. Whatever way we break that range is where I would bet to. Okay, but until then, as long as we are within the range, trading level to level style with the traps. Stop getting trapped, guys. Don't let the false breakout get you. Don't let the false breakdown get you. Use those to your advantage. You know about them, so use them. Be patient. Watch for the trap. Watch for the setup. That's why we call it the setups. All right, guys. Triple Q. It avoided a breakdown of the 480.5 and once again the 478.7 level, finding buying pressure, but they need to show follow through. Otherwise, this is looking like a dead cat bounce, and eventually it's going to break down support. So if it doesn't want to break down support from here, got to stay above 483.5 and clear 485 and 487 to be bullish. Above 485 would send it back above the 5 DMA, and that's when I would be bullish. If we are bearish, 482, 480.4, and especially the buy zone at 478.7 must fail. If those levels fail, get bearish. You want to look to short when support levels fail, especially on the daily chart. Okay, you enter on a false breakout or breakdown of support, but you got to make sure you set your stop loss. So if you short breakdown of 43.5 and 42, if those levels recapture, then just cut your loss. But if they don't, keep holding your puts. All right, and of course for calls, if we clear 45, keep holding your calls. NVDA look like it wants more upside. 123.5 clears and 125 clears. A bottom could be in that would clear my multi-month downtrend line. This pink multi-month downtrend. We already had 3 tests. A 4th test, could it defend again? I don't know. But if it breaks out above 125, a bottom is possibly in. All right, to get back to the downside, it got to break down 123.5 and 122. We break down 122, look to short with 120, 118, and 116 all back in play. Tesla, a lot of profit taken on Tesla. And if there's more profit taken in 242, 240 must fail to put 237 in play. All right, 237 is a fib level. So if that breaks down, it will be very, very, very bad for the bulls. Okay, from here, 244, 246 need to recapture to put 248, 250, and 252 in play. Bulls really need to recapture 252. That is the fib level. And if it can recapture 252, a bottom may be in. All right, let's take a look at IWM. Yeah, it's looking a little bearish here for IWM. Look like an ABC wave to the downside. From here to be bullish, to put a bottom in, it needs to stay above 216.4, clear 218 and 219, 218 and 220. If we clear 218, 220, bulls have a shot at more upside to 222 or higher, maybe even up to 224s. If we get back below 216.4 and 215, guys, more downside is possible with 212.6, 211, and 209 all in play. Let's take a look at the dark pool levels. 567.86 is where majority of activity came in for a SPY. $823 million in premiums. Not a billion, but it's close. Add these levels, add that level to your chart, okay? Triple Q, 481.93, close to my 482 level. Add that level to your charts, guys. Okay, label it dark pool level and you use them as pivot levels to trade. IWM, 217.5. I do have a 218-ish level, so very close, but that's the dark pool level, 217.5. Below would be bearish. Above, bulls may have a shot at more upside. Tesla, 240.66 is where majority of activity came in. The premiums aren't that high though, but 240.66. And NVDA, 122.85. All right, over 300 mil. So the dark pool levels, the premiums have been pretty low. I'm not sure. I'm not sure if the big money play, they don't feel that strongly about something. Usually they feel strongly about something, they go over billions of dollars in premium. So let's show the option flows. Okay, 100K premiums or above. I'm looking at above the ask, sweeps, and out the money because I only want to look at the most aggressive plays. And once again, it's overly bearish. Very bearish. 5.9 mil compared to 1.2 mil. You guys see that? So we got to be careful. Got to be careful. While there's a lot of people buying puts, there's also people selling puts. People sell puts, they're expecting upside or something. So just keep that in mind. Triple Q, bearish as well. 2 million compared to 1.1 million. Not too bad. But definitely a lot more puts than calls. A lot of these puts are expired though, guys. October 3rd. They're all expired. So might not really count those puts then. Okay. So they're all expired from yesterday. And I don't think they made much money. Okay. NVDA. It's bullish. 2.3 million in premium for calls compared to 250,000 for puts. That's very bullish. Okay. Let's see if market makers are going to pay them out. I doubt it, but we'll see. Tesla is bullish. 1.3 million for calls, 1.2 million for puts. So it's pretty close. Pretty even. A lot of these, one of these puts are expired today. Couple of puts for November 15th, one for October 18th, but the rest for the calls are got some time on it. The shortest term was October 11th. All right, I think I covered everything. All right, I think I covered everything. Yeah, got everything. Thank you guys so much for watching. All right, if you guys want more content from Uncle Charles, definitely consider joining my Discord. Other than that, good luck today. Peace.